Good morning. Uh, First of all, thank you very much for starting the day out with some exciting crypto accounting and making this probably one of your first sessions at Mainnet. I'm going to start by introducing myself and providing just a bit of background. I lead the blockchain practice at Propeller Industries. We're a full stack CFO back office service for VC-backed startups. Been around for 15 years. I got my start working with crypto about 4.5 years ago when quite literally Solana Labs landed in my lap as a client. And one thing I realized very early on that in addition to the finance and accounting work that we were doing for all of our clients, there was going to be a second layer of crypto accounting and crypto finance that would be involved. One of the things that we figured out in terms of balance sheet reporting was that most crypto for our clients was considered indefinite lived intangible assets, meaning they could only be marked down and never marked up. The balance sheet is really meant to show you what you own, your assets, what you owe your liabilities, and what's been invested in you. Taken at that, the balance sheet for crypto startups and businesses, for the most part, that have digital assets, whether it's their native asset, NFTs, or others, on their balance sheet is fundamentally broken. And I think that's the challenge that we faced, and I think that we're going to be talking about today. I'll let my panelists here introduce themselves. Do you want to?
Sure. Hi, I'm Emily Westerhold, and I work at A16Z Crypto. I'm a partner focused on finance and business operations for our portfolio. And I should just disclaim today, these comments are my own and not intended as business advice.
I should probably lead with that too, right? Hi, everyone. I'm David Bird with EY. I'm a partner in the practice and focus mainly on the assurance side, but help to run a truly cross-service line team, our digital asset research center, that supports clients in their audits and all sorts of other engagements. And yes, nothing I say here can be taken as tax and investment advice.
Hi everyone, I'm Palash from OP Labs, which is the primary contributor to the roll-up Optimism. My job there is the director of finance, so I manage everything from traditional fiat finance to payroll to everything with our own native token and on-chain.
Thank you. And kind of funny, we're all based in San Francisco and was at a happy hour 2 Fridays ago. We could have saved airfare and just had this conversation there. But Em, you've seen a variety of scenarios as an auditor, CFO, now as a venture investor. What do you think are the challenges that your portcos face doing business on-chain but reporting in GAAP?
Yeah, so there are a few things. I think one you alluded to, Sam, like the biggest thing is that there's not a full picture that you get from the financial statements today. And so, oftentimes when I see the financial statements from a company, I just always have follow-up questions. Like, it's never going to tell the whole story. So there's supplemental schedules, there's follow-up questions, and I think, as you alluded to, GAAP doesn't really allow for that fair value. So you don't know the true liquidity picture or runway. So there's just a lot of discussion that has to occur to get the full story, and ultimately, that's not for me, that's for management. Management has to do that anyway to make those good decisions and understand what's really going on in their business.
And quick follow-up, how do you see the finance role different at a crypto portco as opposed to a SaaS or other sector?
Well, there are quite a few complexities that I think non-crypto companies take for granted. What does it look like if you're in a finance role in a non-crypto company? You have a lot of banks that want to work with you. You have readily available and very affordable business insurance. You have audit firms that are very eager to work with you no matter what. You have clear tax and accounting guidance and regulatory clarity. There's so many things that are just basics that make it a challenge to be a finance operator in the crypto space. I think additionally, forecasting can be challenging if you have digital assets. And then, of course, there's the evolving software stack, which is kind of set if you're a non-crypto company in early stage, and I think it's really evolving in crypto. All of those things, for what it's worth, I think make it very exciting to work in the space and make the role of a finance leader in a crypto company really impactful and really critical. So I think that's one of the more exciting things.
Great. And David, drafting off of M's comments, once said Portco gets ready for their first audit, what do they need to be thinking about to get audit ready, and what are the complexities for a business that works with digital assets when they're looking at their first audit?
How much time do we have for this? I mean, there's just a lot, right? Let's think about what M was just saying, right? You've made it, right? You've got significant investment. You've got off the ground. You've been focusing on product all this time. Can I survive? Can we deliver? And now, because you have done well, you're now expected to provide financial statements, right? One key stakeholder is going to be your investors and others, right? And so, not only that, but there's some expectation that, well, these are going to be audited, right? Someone else is going to take a look at those. So what should you be thinking about? Typically, when you're building your company, you're just trying to deliver product, right? And so you're not thinking, oh, I need to go hire someone that is skilled in finance and accounting and back office sort of things. Because when you do roll into that audit, there's going to need to be someone that is responsible for that. The auditor can't start their work until you actually have financial statements that can be audited. And I know many of you already know a lot of this, but for some of you who perhaps haven't thought about that, in those statements, right, you're going to have your balance sheet, your income statement. All those statements have line items. Each of those numbers are going to have to be supported by something, right? So if you're in this space, you have, for instance, on-chain activity, you've got balances, you've got, activity, maybe revenue over a certain amount of time. Your auditor's going to ask you for documentation around that, or they're going to ask for addresses so that they can go independently look things up. So I would say it's things like that to begin thinking about, having the right people, having those documents in place. When your auditor comes through, they're going to want to walk through all your key processes. Just having documented that is going to make your life infinitely easier. So some of this is sort of the normal stuff, but the on-chain stuff, that's where it can be very specific. Does that kind of, yeah?
No, perfect. And Palash, I think we've sort of set the table. You're the only one on the stage who's actually working at a project. But from an operator's perspective, again, starting with sort of how M approached her comments around her portcos, you are actually one of her portcos. From an operator's perspective, similar question. How do you look at it from a finance perspective?
Yeah, absolutely. I think the way David said really made sense. With a lot of these companies, similar to us, just focus on product and building things and not necessarily how to financially track things and what's the best way to do so. Actually, just recently, a really great example of this. If any of you guys are delegating on Optimism, we just did an airdrop a couple days ago. And this time, I made sure to work with the team that we did it effectively in terms of how we transacted and pulled all the tokens from our treasury, whereas one of the previous airdrops, we just did it with thousands, tens of thousands of transactions to the treasury, which made the accounting a nightmare. So I'd definitely say one of the best ways to make sure that you're having a clear view of your treasury, your tokens, and your on-chain activity to keep you prepared for an audit is making sure you're working with the teams to understand how you're pulling transactions, what's creating, and then making sure that you have the backup for them, which is much easier when it's a small number of transactions for data management purposes versus thousands of transactions, which is very easy to hit when you're focused on building product and pushing out different activity.
Let me address kind of how we've thought about these problems at Propeller. And a lot of this has really culminated in an analysis we call the Statement of Digital Assets. But really starting with the balance sheet entry, One of the biggest challenges, and it actually was really started with work with Optimism, was it's a non-trivial task to actually just get the right number, even though it doesn't really mean anything. And it was a mad dash. We got to what had to go on the balance sheet, and then we realized, A, it doesn't mean much, but B, how do you even back it up? How do you tie it out in a way that an operator can really understand? So we started thinking about building that out from a wallet asset pair basis, just to get to what is the backup behind the balance sheet entry. Once we did that, we realized, hey, we can also now begin to think about digging in and understanding a firm's true liquidity, and bringing all of the digital assets that are in wallets to fair market value. And that was, begins to at least give a little bit more visibility as to what is actually sitting on the balance sheet. And from there, we then started to think about what else can we be doing with this data set that we're organizing, and that's where roles come in. And we have clients that have a half a dozen wallets. We have clients that have hundreds of wallets. And how do you begin to start making sense of that? And so essentially begin tagging with consistent roles, functions, what is the accessibility, and we just have been working this analysis for the last 2.5 years. And something that we started to think about is actually trying to put this down on paper and thinking about what we've termed a public benefit collaboration to open source this methodology. We realized as CFOs and working with operators, it told the story that we needed to understand at month-end close. But as we started digging in, we realized that there were a ton of other use cases. And from an investor's perspective, from an audit readiness perspective, from tax preparedness, and so forth. And we put our heads down and authored a white paper. And very excited to be, I don't know if this is a drop or an introduction, but we have a QR code. You can scan it, you can download it, and one of the things that we're really eager to do is hear from the community, and we want to get feedback, and honestly, if you like it, would love to hear get your endorsement. Again, this is not a firm-led project. This is a white paper that really just is meant to document a practice that I think can really support the industry, gain clarity, and again, support, I think, our quest to find crypto's GAAP moment, to borrow a line from 2022 Thesis' doc. I didn't expect that we would have any additional time. We're actually...
Oh, I would definitely like to comment on that briefly. Yeah? So if you take a look at what Sam is suggesting here around trying to connect your industry-specific activity, certainly on-chain activity, to financial statements that ideally will eventually get made and audited, this overall effort is obviously very challenging for companies in the space. Typically as a startup, you don't already have that whole process built out, and it requires accounting guidance. You need to know how to account for these activities. It requires tax treatment, obviously. It requires having the right tools to obtain that information reliably, hopefully. And so the effort to move from your actual activity to financial statements that are ready for audit is just multi-dimensional. So efforts like this that point to current, even aspirational best practices are ones that I think the industry would benefit from. And so nice to see the effort, Sam.
Yeah, and I think there's a great standardization that can come from it. I think a lot of this was sort of happening informally, right? Like you're asking your clients to prepare something like that. One of my follow-up questions, if I saw a financial statement, was often like, can you prepare like a treasury statement? Like what's the fair value? But this allows a framework to actually do it in a consistent way so that you can compare apples to apples across various companies. And it's like the fourth statement. You know, you have your balance sheet, your income statement, your cash flow, and you have this. And I just think of it as the fourth statement, and one that happens to be quite important in a crypto company.
And I think also, and Flash, we'll end things with your last comment. This isn't a brainstorm that took a genius to come up with. I think you lock any 5 or 10 finance, accounting, crypto professionals in 10 different rooms, they're going to come up with something that's probably functionally similar. I know that people are doing this sort of independently, as Em noted, and I think this is a way really for the industry to come around a standard. But Plash, you were going to say something?
Yeah, I mean, I think definitely in order to have clear reporting like this for audits or to investors, it's really important. And the way to get there is by really maintaining like a good hygiene of your wallets. When I joined the Optimism team, we had so many wallets that just had leftover assets or being used for multiple things. And in the statement of digital assets, as you saw, like I think it's really important to have like clearly defined wallets with tokens, clearly defined tokens they're holding, and for a specific purpose. Which can then make the reporting so much easier. Because really, as long as you can have the data, have a good crypto subledger to understand the data, the reporting of it can be easy. But if it's all over the place and messy and used for different things, then it can turn a pretty simple process into a big nightmare. And the end result of having the statement of digital assets is just so valuable for me personally to understand where we're at, to break down with the numbers on the books, but also like to share with team members and externally. It's really important to be able to understand your on-chain position, especially for treasury management.
It's really sort of part of being hyper aware of your wallets, right? I mean, companies in this space use a great variety of different custody environments. Sometimes it's self-custody, right? Your own sort of non-custodial solution. Sometimes it's at a third-party custodian. And when it comes to that audit lens, we're tracking, and so should you be, the counterparty risk. If you are keeping your assets, your treasury, at a custodian, you ought to be thinking, hey, do I still have access to these tokens? It's one thing if you were in TradFi, right, and it was just at a bank that's been around for 100 years. There's so many processes there, but here it's important to really focus on that. Sam?
Yeah, and just picking up that thread, the number of times that we have clients that we onboard who 6 months into the engagement say, oh, I forgot we have this wallet that was my personal wallet that may be commingling. But I think especially when we onboard new clients, being able to get it all out on the table and actually see the entire picture is crucial. But anyway, thank you all for coming, and appreciate it. Please reach out to me if you're interested in learning more, and happy to share the white paper directly as well. But thank you to our panel, and thank you for coming out.
Thanks, Sam.
Thank you.
Thanks, everyone.